Hi guys, I'm Jalota. Let's continue with our MCQs of financial management. This is chapter number 1. This chapter defines entire scope of your syllabus also and this entire subject also, what you precisely learn in financial management. But the MCQs of this chapter are more or less quite same, that they have asked too much or too many MCQs around profit maximization, then wealth maximization up and so on. So as I did in the last MCQ session, I'm going to be doing the same thing. I've combined around 3 MCQs in this entire session because there is nothing much new for us to be teaching over here. So therefore, it'll just become a repetition. Let's start it off. Just before I start, please do remember that every possible MCQ of CA Inter costing is already there on our YouTube channel. MCQs of CA Inter FM are coming out. You all are aware of that. And then CA Inter costing complete lectures are coming out every Saturday, Sunday. Plus, let me also just remind you, we are always the first one to be bringing out the complete solution of the costing paper the moment the test is conducted. So ensure to check it out. If you all have given the attempt, you can use such videos to check how many marks you'll be getting. And in case you still have to be giving your exams in future, then use these videos for your practice purpose. Let's start it off. The first question for today is, which of the following are microeconomic variables that help and define and explain the discipline of finance? Okay. Risk and return. Now, to be very honest, FM does talk of risk and return. But let me read the question first. 4 options. Second, capital structure. Okay. Third, inflation. Okay. And lastly, all of the above. You should be knowing the correct answer. Even if you have done basic FM, you should be able to answer. Answer now. Now see, which of the microeconomic variables that help and define and explain discipline of finance? Now, finance, first of all, is concerned with risk and returns. It does not say that we are only looking at profit maximization. If your goal is only profit maximization, what you will start to be doing, you will start to be taking all those decisions in which profit is highest. But then over there, the returns also could be very high. Finance also does talk of capital structure, okay, that some capital structures have high risk, some have low risk, etc. C, inflation. Your financial management does talk of inflation because ultimately the returns have to be beating the inflation. So out of the 4 answers, I guess over here, like financial management does talk of A also, B also, C also. So answer should be D over here. Yeah. That is your first question. Second, financial management is mainly concerned with, bring me the 4 options, acquiring and developing assets to forfeit its overall benefit. Okay. Second one, acquiring, financing and managing assets to accomplish the overall goal of a business enterprise. Okay. Efficient management of the business. And lastly, sole objective of profit maximization. Now, these are 4 slightly different options. Okay, just try to recall whatever you all have done in previous MCQs and try to arrive at the correct answer. Comment right now. Now see, I'm trying to just thinking which will be the correct answer. D cannot be the correct answer because sole objective is not profit maximization. It is wealth maximization and profit maximization comes into that. Okay. A looks to be very stupid option. Acquiring and developing assets to forfeit its overall objective. Why the hell we'll try to forfeit? Forfeit means cancel. Okay. Why will we try to develop the assets to cancel our main objective? Okay. So it doesn't make sense also. Okay. So A cannot be the answer. D cannot be the answer. Okay. Then what is left over here? C. Efficient management of the business. Yes, that is essential. But then B is also there. Acquiring, financing and managing assets. I guess B includes C also because it manages the assets to accomplish overall goal of a business enterprise. I guess out of B and C, I like to go for a slightly better answer, that is B, acquiring, financing and managing assets we in FM, we always try to be thinking like this, that we have to invest to get high returns. Those high returns ultimately will pass over to the shareholders. They will think that the company is doing good. If they will think that the company is doing good, they will start to buy the shares. Okay, in case you are not a shareholder, in case you are, you like to buy more number of shares, and then that's it. I guess with that, like your profit objective will be getting satisfied, but more important, your wealth maximization principle, that is the overall goal, will also get satisfied. So out of the four options, I'm thinking B should be the correct answer. We try to acquire the assets. We try to finance them through the cheapest source of finance. We try to manage our assets, means manage our business to accomplish overall goal of a business enterprise. The overall goal in end will be wealth maximization. So therefore, to accomplish wealth maximization. So B should be the answer. Yeah, B is the correct answer. Okay, check. Then the third question, which of the following need not be followed by a finance manager for measuring and maximizing shareholders' wealth? We should not follow this thing for measuring and maximizing shareholders' wealth. Accounting profit, cash flow approach, then cost benefit analysis, and lastly in this case, application of time value of money. This is easy. We all have done exactly a similar question like this in MCQs itself some time back. So you all can tell me the correct answer, please. Now see, wealth maximization does talk of cash flow approach. It tries to be saying ultimately what matters is money. Okay, that is why in your chapter number 7, that is investments or capital budgeting, we only talk of PV of inflows and PV of outflows. Whenever you take any decision, cost benefit approach is needed. We all are aware of that. Okay, you need to be ensuring that the benefits are much more than the cost. Only then any decision will be more beneficial to us. D, application of time value of money. That's what we all did over there also. That is time value of money. Okay. In capital budgeting, we all used our discounting factor. Our discounting factor in this case is nothing but cost of capital. So therefore, like the only thing that is never ever used is accounting profit. Why accounting profit is never ever used? For a simple reason. Accounting profit is never ever used because in this case, it only revolves around accounting principles. It does not talk of, say, business. Example, say goodwill written off. These are all useless things. These things have come because of some crap like, say, accounting standards or IFRS or Ind AS up and so on. But in business, all these things do not have sense as such. Whenever you write down, say, goodwill written off, technically you are not paying anything here as such. Okay. So we should only try to talk of hardcore cash flow concept. Okay. So out of the four options, A should not be followed by the finance manager for maximizing shareholders' wealth. Okay, so answer should be A over here. Yeah, that is the correct answer. So that's it from my side for today. Okay, I'll see you next time in another question. Till then, take care. Bye.